Hey everybody, hope this finds you doing well. This is Danelle, and today we're going to go over some of the biggest news stories over the past 7 days. Let's go ahead and start off with the crypto market update. As you can see, Bitcoin is currently trading at $65,500. It is now down 5.42% over the past 7 days. We did have nearly a 10% dip on Saturday, April 13th. And a lot of that had to come from the news that Iran had attacked Israel with missile and drone attacks. And so that shook the market, along with a few other things that came out this past week, along with in the United States. Tax day is on Monday, April 15th. So some of the liquidity could be drawing out due to people potentially needing to pay taxes to the U.S. government. So there could be a number of reasons why Bitcoin dipped, but it did see a nice rebound when it dipped under $62,000. And we can see this here on TradingView. You can see if we look at the weekly chart, and I should say the chart over the past week, we can see that Bitcoin had this major candle in a couple weeks down on April 13th. And it had gone from 67,000, as you can see here, and it dipped all the way down to actually under 61,000 at $60,822. But then we started to get a rebound back, and now we're currently trading in that $65,000 range. So we also saw some of the other cryptocurrencies dip as well. Of course, Bitcoin is the coin that rises all boats and sinks them as well if it also starts to go down. So we saw that Ethereum actually dipped below $3,000. It has now recovered quite well and is back up to $3,100, but it is down 9% over the last week. We see that Solana is under $150. It is down 16%. So we notice that some of these altcoins are going to bleed a little bit more than Bitcoin. That is definitely something that generally happens when we see that there's a downturn in the market. Of course, you're going to have some exceptions to the rule, as you can see here. For example, Toncoin, which is cracked to number 8 in the top 10, it is up over 26% over the past week. So you will see some exceptions, but generally speaking, most of the altcoins are going to go down, and going to go down a lot harder than Bitcoin when Bitcoin goes down. As you can see, Dogecoin is down 19% over the last 7 days, and Cardano currently hanging on to that 10 slot, down 21%, currently trading under 50 cents at 46 cents. So what were some of the news stories that came out over the past week that has kind of shaken up markets, just generally speaking, not only in the cryptocurrency market, but also in the stock market? So we can see here and look at this article that the CPI data numbers came out this past week, and you can see that consumer prices rose 3.5% from a year ago, and this is given the metrics from March of 2024. So it's comparing that 3.5% is comparing to March of 2023, and so the prices have risen 3.5% year over year. So you can see here that the consumer price index is a key inflation gauge, and it rose 3.5% in March, and it's a little bit higher than expectations. And so we did see a dip also in the traditional stock market as well. And then if you see here, there's a few key points in terms of what were some of the items within that CPI data that showed that the price, or I should say that showed that the percentage inflation was a little bit higher this past month. It shows that shelter and energy costs drove most of the increase, when energy rose 1.1% after increasing 2.3% in February. So it's continuing on a steady incline, I should say. And then also, while shelter costs were higher by 0.4% on the month and up 5.7% from a year ago. So it's costing a lot more money to find shelter. Many of us can understand that and are in that boat where we're starting to see prices for rents continue to go up in price, and it's becoming more expensive to find shelter. Obviously, it's also very much more expensive to buy food. Eggs, for example, are still considerably much higher than what we paid over the last several years. And so we're seeing here, if you look at this chart, you look at the year over year percentage change, and this is going back to 2021. So after the pandemic, you can see here that we were really high in 2022. That's when the Federal Reserve jumped in and started to raise these interest rates to try to combat inflation. And we've talked about that in a number of videos where the Federal Reserve does make the decision whether or not they're going to cut or hike interest rates. Currently, we have been staying steady at it's around the 5 to 5.5% range right now for the federal fund rate. And now we're seeing that the prices have gone down in terms of inflation, but we still are not where their benchmark is. They said that they would like to get inflation down to around 2% year over year change. And right now we are at 3.5%, actually a little bit up from where we were in February, which was around 3.1 to 3.2. So we definitely want to see that inflation number go down, not only to be able to see the interest rates go down in terms of being able to borrow money. That affects a lot of risk assets. A lot of high risk stocks and tech stocks definitely tend to fluctuate depending on the inflation numbers, and particularly what the interest rates are, because if it's more expensive to borrow money, then they're unable to take money to invest into the company and take a little bit more risk when they're trying to build up the company, and hopefully in time continue to build up margins and products in what they're trying to do in the tech space. So we want to start to see that inflation number continue to go down a little bit more. We're not sure. It may not be likely that we'll actually get it down to 2%. People are actually expecting that the Federal Reserve will be cutting these interest rates down potentially later on this year. Some expected they already would have by now, but that isn't the case. Partially, mostly in part, most likely is due to the fact that these inflation numbers are still a little bit higher than they would like. So you can see here, check out this article on CNBC. Obviously, there's a lot of other resources as well online that you can find that talks a little bit more about the consumer price index in depth and what's been going on over the last couple of years when we look at the percentage change from month over month and year to year. So that definitely had some effect on the cryptocurrency market over the past year. So one of the other things that people are interested in, and also saw some changes when it comes to decentralized exchanges and some of these other altcoins in the cryptocurrency market, is the fact that the SEC served a Wells notice to the decentralized exchange Uniswap. So Uniswap is a decentralized exchange. They generally swap and allow for trades of Ethereum-based tokens and Ethereum layer 2 based tokens. And basically what it does is you're able to use your own wallet, your hot wallet, which is something that's connected to the internet that you have full control over. You can connect it to the Uniswap decentralized exchange, and then you are able to trade, buy, sell your coins using Uniswap, and you're basically swapping your coins with other people in the market who are also using Uniswap. And so Uniswap at no point in time is actually holding your coin. So there is a possibility that this may be another lost cause for the SEC. Now the SEC has lost to Ripple as well as Grayscale. Ripple is the company behind XRP. They found it not to be a security, and so it's still unclear as to exactly what the charges may be when it comes to this Wells notice to Uniswap. Most likely it will have to do with them saying that Uniswap is basically running a business as a unregistered broker, because all brokers need to be registered with the SEC if you're going to be catering to United States investors. And so they're saying that Uniswap is a unregistered broker, but there's a possibility that they could lose on this, because recently a federal judge, as you can see here, ruled that Coinbase Wallet, which is a decentralized wallet, which is a wallet that you could actually use to connect to Uniswap, it said that it could not be conducting brokerage activities as the product does not make investment recommendations or hold customer funds. And Uniswap does not do that either. From my understanding, Uniswap is only used as a trading platform. It doesn't make investment recommendations. I know that. And from my understanding, it also doesn't hold customer funds. And if it does, it's only just if you're able to, and I'm not even sure if you're able to do this, if you're able to place limit orders and things of that nature, where it actually would hold your funds until your limit order is placed. I believe the funds are still technically in your wallet until that exchange actually happens. But anyway, we will be keeping posted basically on what's happening with this issue, because Uniswap is the largest decentralized exchange in the cryptocurrency market. And if we go back here to the cryptocurrency list by market cap, you can see that Uniswap is in the top 25, and because of the news, it has definitely been the price of the coin has been affected. As you can see, it's down 35% over the past 7 days. And so we just want you to, and just remind you that we definitely try to make sure that we keep you posted on some of the biggest news in the cryptocurrency space nearly every day on X. You can go here at Networkchain. As you can see here, we talked about inflation. We talked about the SEC now being focused on Uniswap and serving them the Wells notice. And we also try to get into some of the macroeconomic events that also affect investing, particularly in the cryptocurrency market and emerging markets. So we want to keep you posted on what's going on. So of course, we're doing these videos every week. We look forward to hearing from you. We appreciate your comments, and we appreciate you obviously watching and following as we try to provide our community with more opportunities and understanding of the importance of investing and understanding what is happening with your fiat currency and the rise of decentralized finance. So please make sure to check us out not only on X but also on Instagram. We have images as well as some information here. So with Bitcoin, we are going into the halving, one of the biggest news events that's going to happen, particularly when it comes to Bitcoin. As we know, Bitcoin generally sees a all-time high after the halving. We are in a bit of an anomaly right now because we did see that Bitcoin did go up to an all-time high, breaking 69,000, going all the way up to 73,000 prior to the Bitcoin halving, which is going to be happening in the next 4 to 5 days. It's still estimated to be around April 20th. It could potentially be April 19th. So we're waiting to find out what happens there. Do we reach another all-time high? Will we break 75,000, heading towards 100,000 over the next several weeks, over the next several months? Obviously, that remains to be seen, but we'll see after this halving in 2024 that the reward will now drop from 6.25 Bitcoin to 3.125 Bitcoin per block. So we're going to see that the demand is obviously incoming. We are hearing that Hong Kong could be approving Bitcoin and even Ethereum ETFs this week. So that could be another influx of demand. We saw how much Bitcoin has gone up since the approval of the Bitcoin ETFs in the United States. So we could see another large influx, another inflow of money and demand coming into the Bitcoin space. So we will definitely keep you posted on that. As you can see here from this chart, the blue line represents where we had the Bitcoin halvings. And you can see that each time after the blue line, you see that Bitcoin rose up in price. This is from 2012. It went up in an exponential amount. Then you see again after 2016, we hit a high of around 20,000. Then after the last halving in 2020, we went from having a previous all-time high of 20,000, and then we saw it go all the way up to around 69,000. So people are predicting that we should get at least to 120, maybe up to $150,000. Obviously, that remains to be seen. There are a lot of different macroeconomic factors that are going to be involved, as well as we hope to, avoid any type of black swan, similar to what just happened this weekend when you have geopolitical issues that are also in play. So you definitely want to stay informed, definitely want to stay posted on the news and what's happening, not only just in the cryptocurrency market, but in the macroeconomic environment as well. So we're going to try to do our best to keep you posted on everything that will affect the cryptocurrency market. But in the meantime, we want you to take care. We look forward to linking up with you soon on the Networkchain. Until next time, bye-bye.